I think, first of all, there has been a lot of positive surprises in the market, and that continue to fuel the market sentiment. I think when we were just looking at the macro economic level, I do agree the market will continue to be turning more positive because more data coming out is actually looking to be recovering back to the pre-pandemic levels. However, I think on the equity side, market has been pricing in a brighter recovery. I think that has been happening since April and May when the data started to be reviewed by the market. Near term is I think the positive sentiment will continue to be driving market performance in the near term because lately the new home sales has been continuing to surprise on the upside, which is a very traditional key driver to boost market sentiment. But I think overall speaking, I would still suggest investor to be more cautious on what are driving the underlying share price performance, whether it's by policy, whether it's by purely sentiment, or it's really driven by its fundamentals.
Yes, Frank, it does provide a reminder that you have to look past just some of the sentiment drivers and the hope out there over the recovery and the real fundamentals, as you point out, with earnings. And SMIC is a perfect example of that in reality. According to their filing, I mean, the Shanghai listing values the company at more than 100 times its 2019 earnings. Does this make sense to you? I mean, is this a listing that you would touch?
Yeah, well, I think this is a very kind of like stretch and rich valuations example. We have always been, we're a value investor, so we always look at, whether these share prices are trading at, still at discount to its intrinsic value, looking at, their earnings expectations 3 years down the road or 5 years down the road. I would still have to say, if you're looking at, 3 years from now, 5 years from now, these stocks are not looking as expensive as it is. Looking at today, but I think at this point of time, there are still other sectors such as consumptions, other sectors that we like, including educations that are looking a little bit more attractive from a valuation point of view.